Stocks to watch. Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Alex Mathew. Well, we've got a few interesting topics to talk about today, and without further ado, let me get you introduced to my guest. Avinash Gorakshakar is joining me today. Thanks so much for joining me, Avinash. The first concept we're talking about is a sector that has been in focus of late. We're talking about power generators, and really the reason we're talking about it is the cabinet meeting that took place yesterday and the outcome of that meeting, which was to give a little relief to the power distribution companies and thereby to ease the system a little bit. So what has happened is they've allowed PFC and REC to extend loans to power distribution companies beyond the threshold limit for working capital. And according to the power minister, that could lead to power discoms clearing dues worth 32,000 crore rupees with the power generators. How important do you think this step is, Avinash? And how do you see the power sector as a whole? What are your picks there?
Morning, Alex. I think this news regarding the government instructing the distribution companies, especially Power Finance Corporation and REC, to relax some norms for the discoms clearly brings a sense of a small relief, because as everyone is aware, in the entire value chain for power, the discoms have always been under pressure. The dues from the discoms have already lagged significantly, and I think this impacts not only power generating companies, distribution companies, but even merchant players. So I would believe that this is definitely going to be good news for the power generating companies, considering the fact that their cash flows would obviously get impacted positively, as the working capital cycle could be more comfortably eased out. Longer term, hopefully once the cash flow starts getting generated from the discoms and starts moving into the power generating companies and the distribution companies, the power generating companies which were normally ignored by the markets could get a significant boost. I think here our picks would be something like a Tata Power, which I believe has got significant kind of re-rating potential. The management has already been putting on record that a large part of their non-core assets would be used to repay their debt on the balance sheet. So I think this is definitely a good stock to look at. The other company from the PSU space would be NTPC, where numbers have been pretty encouraging. They've said that now they want to go in a big way into solar power. So I would believe that both NTPC as well as Tata Power present a very strong opportunity for investors who have a 12 to 18-month horizon. I think numbers would obviously take some time to figure out in the financials, but I think clearly if this policy is pursued and implementation is done in due earnest, then I think you could see significant re-rating in both these companies.
Fair enough. So that's the update on the power sector, Avinash. We also have another counter which admittedly was in the news earlier in the week because of earnings, Ashok Leyland. But interestingly, after the earnings, which were quite weak, and the management commentary again, that is quite weak. You have a situation where the stock has run up significantly over the last five sessions, about 28% increase in the stock price. So we're trying to figure out whether or not that is justified. What do you think has led to the rally? One, and do you think that the prices at as they stand today are justified? Is it a good buy at this point?
Alex, I think the stock has largely moved because there have been some news reports in the market saying that possibly in the next 2 to 3 weeks, the long-awaited vehicle scrappage policy would be announced by the government, and I think that would be a very big trigger, especially for commercial vehicle manufacturers, because a large component of polluting vehicles come from the commercial vehicle segment. So I think to a large extent, that has been the main factor which has driven such a strong performance for the stock in the very near term. On a fundamental basis, numbers were in line with expectations. In fact, we believe that even the second quarter is going to be a challenging quarter, and hopefully, if macro recovery takes off in the third quarter, then I think you could see some sort of volume recovery happening. Otherwise, FY21, my sense is going to be a washout for the entire CV sector. Coming to the fundamentals and to the valuation, I would believe that the markets are clearly penciling FY22 earnings growth and not looking at FY21 at all. So I think if the stock stock corrects a little bit, Alex, that would be a good time to accumulate it, because in the last 1 to 2 weeks the stock has actually run up significantly. Hopefully, if the policy comes in, then I think you could possibly see a further run up on the stock price. But definitely, it's a stock to buy on declines, and those investors who have it should continue to hold on.
I mean, it has been depressed for quite a while, so the run-up recently is quite interesting to watch. Thanks so much for that update on Ashok Leyland. The last stock, really, in terms of the three that we've picked, is Muthoot Finance, Avinash. And we were speaking about this stock before the program started. The announcement of the results, again, came during market hours yesterday. Gross loans under management increasing by 16%, profit up 52% on a year-on-year basis to 858 crore. But interestingly, from what the management said in the press release, they aim to achieve 15% growth in loan in the gold loan portfolio for the current financial year. But I think what was more interesting, Avinash, according to you, was what they said in the con call that you attended. What were the key highlights according to you, and what are you looking forward to with regard to this stock?
I think, Alex, numbers were definitely extremely strong. And if you ask me how the growth trajectory is going to pan out in the next quarters, I think business is going to continue as usual, and it would definitely grow strongly in a challenging period like the Corona pandemic. Our sense is that this company has a dominance in the rural areas and is the number one player in the gold finance market. So FY21 is more or less factored in, but I think the market should obviously look at the fact that how long gold prices would continue to be sustained at higher levels. And secondly, AUM growth. If the management is confident of 15% AUM growth, any positive surprise there would be taken very positively. I think one point which came out in the conference call yesterday was the digitization of business. In fact, the management is very positive and very hopeful that digitization, which was just about 15 odd percent, has moved out almost doubled. So I think this trend would obviously help them also disburse more loans. And overall, I think clearly from a longer term perspective, any decline on the stock price, Alex, could be a good opportunity. Definitely, longer term over the next say 12 to 18 months, hopefully, if the macros improve, then I think you're going to see a further re-rating. So it remains a peak on declines, and obviously numbers have been in line with expectations.
Avinash, speaking a little bit more about Muthoot, one of the reasons why we've seen the run up is that pop in gold prices that we've been seeing so far this year as well. But the worry really is with gold at such elevated levels, if there is a sudden decline, could there be a sentimental reaction in Muthoot as well? And would you buy into that?
Yeah, definitely, Alex. These are companies which attract a fair amount of scarcity premium, because there are not many dominant players in the gold finance market. Considering the fact that despite PSU banks and private banks have tried to cut into this market, but they have been largely unsuccessful. I would believe that if gold prices do correct, which is a near-term possibility, then also I think the company has strong operational metrics to play on, and I think core demand is definitely growing. So that is a good part. The rise in the gold prices primarily helps them to maintain their loan to value kind of proportion, and which I think gives them a further safeguard, as golds are concerned. So I think definitely, if the price corrects, one should definitely use this opportunity to accumulate the stock, and I think this would definitely give decent returns over the next say 12 to 15 more months.
Fantastic. We have about 30 seconds. Would you like to comment on any stock that you would pick in today's session? Anything stood out for you, or in the near term? Anything you're watching
Uh,
closely?
I think, Alex, one theme which is going to very strongly stand out over the next, say, 6 to 12 months is clearly the rural theme. And I think within the rural theme, we like a company called Finolex Industries. It's a very
Okay.
dominant player in the PVC pipe market. Most importantly, it's a very well-run business with very little debt on the books, a lot of cash on the books, excellent working capital. And I think, market should definitely give it a re-rating in the coming quarters, considering that the rural business is going to grow exponentially, and with good monsoons plus with government support for rural kind of activities, I would not be surprised that you could possibly see levels of 500 to 525 soon. So there's a good amount of risk reward on the table even as of now. So I think this could be an
All
interesting
right.
choice for investors.
Okay. All right. Thanks so much for joining me on today's conversation, Avinash. Always a pleasure. And to you, dear listener, viewer, thanks so much for tuning in. There's a lot more coming up in just a bit.